Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on today in the markets? Well, we got the Dow. Dow's up about 200. Nasdaq's down about 100. S&P kind of flat. Now, we finished off the first quarter of the year. Now, we had the NASDAQ. The NASDAQ was up 17%. 17% for the quarter. That put it on pace to do what? About 68% for the year. Now, do you think that's going to happen? I do not. The S&P up about 7% for the quarter, and the Dow was kind of flat for the quarter. But that NASDAQ has really exploded higher. Now, this is what I would call a short covering rally, a bear market rally, if you will. It's a short squeeze, right? A lot of people were short the market based on the banking crisis, as I like to call it, the financial crisis. A lot of people shorted the market, but what happened? Well, that's where the Federal Reserve came in, printed $500 billion in just 2 weeks' time to get the market going again. And did it goose the market? Yeah, goose the NASDAQ a lot, right? But now, do I think that's going to continue? I do not. I think this is kind of a sucker rally that's going to bring in a lot of the bulls. A lot of people think it's a new bull market and we're headed higher. Not my take. I do think we can come up and retest the February high, which were about 4170 on the S&P. We could come back up in test those. We're at about 4100 right now, but I think we'll come down to the 3400 level relatively quickly. I think the downfall will start to happen. Maybe not this week. This is the week before Easter. It's a shortened trading week. Only 4 trading days in this week. I don't see it coming down this week. I think this week they'll try to push it up and retest the February highs. And next week, probably sometime towards the end of next week, we'll start to come back down. This is just my take on the market. I know a lot of people have a lot of different takes, and that's just the way I see it. You may see it completely different. Now, it was the weekend. I always look for headlines in the real estate market. Kind of a slow weekend for headlines in the real estate market. However, of course, the National Association, they're always positive on real estate. They came out and said, well, pending home sales are up 0.8%. Month over month, 0.8%. That's all they could come up with. Now, that doesn't seem all that positively because that's pending home sales. That's not actual closed sales. Actual closed sales are still downward. They're in a downward direction. Now, what I want to talk today about is kind of, the real estate bubble. We're in a real estate bubble. A lot of people disagree, say it's not a bubble. Of course it's not. But we're in a kind of this everything bubble, right? This everything bubble. And this everything bubble is now going to start to pop. Now, why do I think it's going to pop? Well, I think the Fed, they came out and they pivoted, right? Well, on interest rates, they haven't pivoted. They haven't lowered interest rates, and they don't want to lower them because they'd look really stupid doing that. But the pivot was going from quantitative tightening back to quantitative easing by printing $500 billion. Now, $500 billion is not going to be enough to solve the financial crisis, so that'll get up to around the $2 trillion, maybe $3 trillion level, and this will be the biggest quantitative easing we've ever had. So in theory, the Fed has pivoted, right? And this is where the problems start. You see, in 2008, after the Fed pivoted, which was 2008, right? That's where the houses started to go down. And they finished going down around 2012. 2008, the Fed pivoted. That's where the stock market started to crash lower and bottomed out around 2009. You see, once the Fed pivots, then the markets do start to come in. And in my opinion, they've pivoted, waved the white flag against inflation. Oh, we're going to see a lot of inflation. Did you notice oil today back above $80? And it's going to probably head to 100 now. Very inflationary. So inflation's going to come in. But I want to talk about this bubble and why I know that it's going to come down. All right. So what happens in the stock market? That it's all intertwined. Stock market, real estate market, they're all intertwined. The whole marketplace is intertwined when you're in an everything bubble. But I'm going to start explaining some things here in the stock market side. All right. So if you go back to the tech bubble, a lot of you weren't trading stocks back then, but in the year 2000, okay, we had this big, the tech boom, right? We had the NASDAQ. It just took off like crazy, kind of like it's doing now, right? Well, there were all these stock buybacks. And for the time, it was a record high. It was about $50 billion a year in stock repurchases. Now, what happens in stock repurchases? Well, companies, they actually go out and they borrow money to buy their own stock back, right? And that makes their stock go higher because they're the ones buying it. So the stock goes higher. So there was $50 billion a year in stock buybacks in the year 2000, right? All right. So by 2002, that 50 billion number dropped all the way down to 15 billion. What did the stock market do? Well, it came all the way crashing down, right? That was the year 2000. All right, so let's look at 2007, right before the 2008 crash, right before that financial crisis in 2008, the great financial crisis that brought the markets down. What were stock buybacks doing? Well, they were at a record high again, about $120 billion in 2007. $120 billion, which was a record for the time. And then by 2009, went from $120 billion all the way down to 10 billion. What did the stock market do? Well, it came crashing down, over 50% down, right? Okay, it came down. Okay, so that's what the stock market did in 2007. Now, where are we at right now in 2023? Well, in the last year, there has been $260 billion worth of stock buybacks. Once again, a record number never seen below. Now, I think this is telling us that we're at a top and we're going to start to get the market crashing lower. Now, it's going to come down and what's it going to go from 260 billion? Maybe the buybacks go all the way down to 20 billion. But because the Fed has now pivoted, those buybacks for companies are going to be a lot more difficult because the cost of money is getting more expensive for them. They have more trouble to get money. They can't borrow money as easily. Money's starting to tighten up. Okay, so what happens when money tightens up? Well, when money tightens up, there's what's known as zombie companies. Zombie companies need to borrow money just to stay alive because they don't have money to pay just the debt they have. Now they don't bring in enough cash flow. Now that's 1 out of every 5 companies is a zombie company, right? They don't bring in enough cash flow to make their payments. So what do they have to do? Well, they have to borrow money just to pay the interest on their debt. Well, right now it's tightening up. It's getting harder to borrow money. The Fed has pivoted. These zombie companies are going to start to go out of business. Now, if 20% of the companies, I'm not saying they're all going out of business. Some of them will find different sources, private funding to keep the company going, right? But there's going to be this thing called the recession coming. Now, I talked to a millennial economist over the weekend. It was quite interesting. He completely different take than I have. His take is there's never going to be a recession again because we can print money. When he went to school, they taught him that MMT. You can print as much money as you want to keep everything going. So he thinks that no recession is coming. But I'm telling you, a recession's coming, and a lot of these zombie companies, they're not going to make it. And that's 1 out of every 5 company on the S&P 500. 1 out of every 5 qualifies to be a zombie company because they don't bring in enough cash flow to pay their debt. So a lot of these companies are going to go out of business. 20%, right? Let's say you go to the mall. If your mall may already be like this, where you walk by 5 stores, one of them's going to be closed. 20% of the businesses are going to go under. This is called a recession. And recessions are not all bad. They're usually a sign of opportunity, usually a sign where money is made, usually a sign sign where entrepreneurs step in and find better ways to do things. Because what happens is the bad companies, the ones that should not be in business, they go out of business and new companies get born, because that capital that's in the bad company that's going into those companies no longer goes into those companies. So that money finds new companies to go into. And so that's why entrepreneurs will rise from the ashes, if you will. So things will get better. It will be opportunity. But we're coming into this recession, and this recession is going to hit hard. If 1 out of 5 companies goes out of business, well, a lot of jobs are going to go away. And these are a lot of high-paying corporate jobs. I mean, just McDonald's, they announced they're closing their corporate headquarters so they can lay off these corporate people, the corporate officers. That's fascinating to me. McDonald's is in trouble. But anyways, 1 out of 5 are going to go out of business. There's going to be a lot of layoffs, this recession, right? And what is that going to do to the housing market? Well, it's really going to accelerate the downward spiral that we're in. You see, we're already coming down at the fastest rate in history. The last 8 months, we've dropped about 13%. That's never happened before. 13% is a big drop, but that drop is going to pick up speed when this all starts to play out. Now, here's the steps. Fed made a pivot. Money's getting harder to come by. The banking system is starting to freeze up. And it's not just the banking system. It's the brokerage firms. It's the credit unions. It's the pension funds. It's the insurance companies. It's going to take trillions and trillions of dollars to free this up, to bring liquidity into the market. And they're not going to be able to print enough liquidity to make the markets flow again. So the recession will happen. Now, I know Jerome, he doesn't want a recession. And the MMT people say, Jerome, just print the money. We don't want a recession. We don't want to feel any pain. Now, I'm an old school guy. I think that recession is good. It flushes out the bad businesses. And those bad businesses, yes, a lot of jobs are going to go away. And those people are going to have to go and find new jobs. But in the meantime, what are they going to be doing? They're going to be putting their houses onto the market. Now, maybe they don't put them on the market. Maybe they give them back to the bank, and then the bank puts them onto the market. You see, the foreclosure process is going to ramp up speed, and this is going to accelerate the downward pattern. Now, right now, a lot of sellers are sitting back. They're very nonchalant. They go, well, if I can't get what Billy Bob got, I'm not going to sell. You bring me an offer like Billy Bob's offer, I'll sell, but otherwise, I'm not going. Well, they're not going yet. But once the forced selling comes in and they start to see the downward spiral and the prices start to drop more and more, all of a sudden they don't care what Billy Bob got. They'll be calling me up. They'll say, Mike, get me out of my house. I don't care. I want to sell now. But the houses have come down. I don't care, Mike. Just get me out of it. It's all the money I have is in my house, and I'm losing that equity at a relatively fast rate. Now, the federal government, they'll tell you we have 3.6% unemployment. Now, I don't believe that number, because you see, the workforce is back to where it was even before the pandemic. Now, a lot of people just went into plain retirement. A lot of the baby boomers were not going back into that office. Nobody wants to go into the office, and that office space is sitting vacant. What's happened to the commercial property? Coming down, because nobody wants to work in the office anymore. 50% vacant. So the price of the building comes down by 50%. That's happening right now as we're talking. Look at the housing market's going to be the same. It's going to come down about 50%. Now, not in your area. Your area is the great area to live in, probably going to stay propped up. But most areas are going to drop. They're going to drop, and the pace of dropping is accelerating. Look at 13% in 8 months is pretty fast, right? But once this steamrolls, once these layoffs happen, once the recession hits, that's where you can call it whatever you want, but that's where the pain is going to be felt by a lot of these sellers that are not getting out. They're getting offers close to Billy Bob. They're saying, no, I don't want to take that offer. I say they might be a little foolish because those offers are good right now. Yeah, they're 10% below the top, but they're going to be a lot lower. Once again, this is just my take, and my millennial economist, man, he's got a completely different take. He thinks houses are going up. He thinks he's going to buy. As a matter of fact, he's looking to buy. I'm trying to talk him into using me as his broker. We'll see how that plays out. Anyways, get out there, everybody. It's a Monday. Hit the subscribe button. Give me the thumbs up. Why not? I'm Tall Mike. Bye-bye now.